Welcome, esteemed investors, to the market update with FISG. I'm Tom Kitty, as always. This week is the last week of the year. In December, which is indeed the final week, let's keep a very close eye on asset prices. We'll start with gold. Gold prices have been sideways for a long time, not going up or down for a while. Gold prices form a triangle. If gold can break out of this triangle upwards, it enters an ascending pattern. But if gold can't break upwards and instead breaks down, it will create a descending triangle. The upper range is around $2,750 to $2,780 per troy ounce. However, if it breaks down below around 2,700, it may reach the key support area of $2,550 to $2,500 per troy ounce, a significant support level for medium-term investors. For those looking to accumulate gold for medium-term investment, keep an eye on the support levels around 2,500 to 2,550. It's 2,700 round here, 2,700 round here. There will be chance to run into the important support area of 2,550 to $2,500 per troy ounce, which is considered an important support area for medium-term investors. For anyone who wants to accumulate gold for investment in the medium term, look at the support area of 2,500 to 2,550. Now, moving on to the Nasdaq market, or the American technology stock market. We are still short on Nasdaq and maintain a bearish outlook due to tight valuations. If we look at the EPS of the market, or the Buffett indicator, the market has been running hot, exceeding its fundamental value quite a bit. Therefore, we might encounter selling pressure from funds, adjusting their portfolios or reallocating assets. This could lead to a market correction next year, which we expect to start around February. There may be portfolio adjustments or reallocating assets, which could lead to a market correction next year. Expect this to start around February. As I told investors, the Buffett indicator, which divides market cap by GDP, shows the US GDP at 208%, a high level equivalent to 2 standard deviations. Historically, reaching this level often leads to a major US stock market correction, so we'll see what happens next year, especially after such a strong rise. A 10% to 20% drop is normal. For those invested in the US stock market with a high cost basis, we suggest reducing your portfolio. Yet crises bring opportunities. If the Nasdaq drops sharply, it will also affect major stocks like Apple, Google, Amazon, Tesla, and Microsoft, presenting a buying opportunity for those interested in the Nasdaq's top tech giants. A correction in the US stock market is likely, and we'll wait and see what happens. With a strong rise, a drop of 10% to 20% is normal. So, for those invested in the US stock market with a high cost basis, we recommend reducing your holdings. There are chances during a crisis, if the Nasdaq index drops fast, it will also pull down the 7 tech giants like Apple, Google, Amazon, Tesla, and Microsoft. Next, let's talk about oil prices. US oil. We expect oil to rise in the long term, reaching $100 to $120 per barrel. Right now, oil is moving around $67 to $69 per barrel. The 7 tech giants, including Apple, Google, Amazon, Tesla, and Microsoft, are experiencing a decline. Next, let's talk about oil prices. US oil. We expect oil prices to rise to $100 to $120 per barrel long term. Currently, oil prices fluctuate around $67 to $69 per barrel. We recommend buying on dips. Next, let's talk about the price of oil, which is US oil. We still have the same view of US oil. In the medium to long term, we see oil going up and having the opportunity to reach the level of 100 barrels per US dollar. I'm sorry, 100 US dollars per barrel to 120 US dollars per barrel, but right now the price of oil is still sideways at the level of around 67 US dollars per barrel to 69 US dollars per barrel. The age is still the same. It is accumulate buy or buy accumulate. Next, let's talk about the US dollar index, or DXY. After observing that the US dollar was moving sideways following the presidential election, it has now strengthened again, which was somewhat unexpected for us. Therefore, we recommend that investors watch and see for now regarding the US dollar, especially since there was a recent announcement of an interest rate hike, which has contributed to the strengthening of the US dollar. So the next thing to watch out for is the Fed Watch 2D. So regarding the Fed, last week we saw a reduction in the policy interest rate from the Federal Reserve, which aligned with market expectations, dropping by 0.25% from 4.5% to 4.25%. But the highlight isn't just that. The key point is that for next year, the Federal Reserve has updated its dot plot. Initially, it was expected that there would be 3 to 4 rate cuts next year, but that has now been revised down to just a forecast of at least 2 rate cuts. The total adjustment could be 0.5%, with possible cuts of 0.25% each time. 3 to 4 times next year has already been reduced. It has been reduced to just a prediction that the interest rate will be adjusted down at least twice. The interest rate adjustment will be at 0.5%. It may be adjusted at a rate of 0.25% each time. From now on, investors might not need to worry too much right now, since there will be long holidays coming up, whether it's Christmas Day or New Year. With that said, I encourage investors to invest carefully and successfully speculate for profits in the coming year, 2024. I hope that by now investors have been able to secure some decent profits. If you found this market update helpful, please like, share, or provide feedback to the InterStell Group broker. That's all for today, wrapping up the last week of the year with the weekly market update by FIS. I'm Ton Kitty, and I wish you all the best. Goodbye.